There we go. What's good, everyone? This is the big event here, the FOMC press conference, and that's what we're going to be waiting on. But how's everyone doing? Text you prop on Instagram, but you didn't respond. Why? Bro, honestly, I'm still getting through all the DMs. Like you'd be surprised how many hundreds of people have hit me up about that. So it's not personal. It's just I'm still getting through everyone. You know. Oh, please see gold. Yeah, I was about to break down gold right now for you guys. Actually. What's up, guys? FOMC live stream right now. Click right there. Make sure you guys don't miss out. If we take any trades, they're obviously going to be bangers. And yeah, I'll see you guys there. No, let me redo that. What's up, guys? Ollie Trades, and we are live for FOMC. Make sure you guys click right there to tune in. I'll see you guys there. Trades, and we are live for FOMC. Yo. All right. So obviously, FOMC is going to drop in 15 minutes, and then 30 minutes after that is the press conference. So that's the very important part. Now, one thing, I'm going to be starting off the day very quickly, very easily, easy $50 giveaway. We'll literally give this away before the news even hits. Everyone, go comment. Everyone go comment. Everyone go like and comment on my recent reel and share it on your story for an extra bonus point. And whoever does that is going to be entered into a $50 giveaway. We'll do that right now. Special guest. Special guest on the live stream. What's up? So, guys, gold literally smacked the exact fucking take profit we had set. I honestly closed out yesterday before market closure just for the sole fact that I did not want to be in this when news hit. News was uncertain. I was up 100% on my new account flip. It was the first trade I took, and I was like, this would be really stupid to let this slide. So, the risks, they didn't outweigh the rewards, in my opinion. So yeah. So that's why I got out of it. But we did secure a crazy 3 RR on that trade. But yeah, guys, I'm going to be giving away. We're going to do that $50 giveaway right off the bat, and then we're going to do a bigger giveaway at the end. But $50 right off the bat to anyone who likes, comments, and story shares my latest reel. That's the one. It says Winning Strategy Explained. This one right here. And yeah, so whoever gets to that, 10 minutes from now, we're going to be giving away $50. No. It's a giveaway. So we're going to pick one person to win that, and then we're going to pick one person at the end to win something bigger. I already see some people doing it. Let's go, guys. We have 182 people on the stream. So for the new people who have joined, it's very simple. We're going to be giving away $50 to someone. All you guys have to do to enter this, it's very, very simple, is go to my Instagram, go to my recent reel. It says Winning Strategy Explained. Like that reel, comment, and story share. That's all it takes. We're going to be giving away that $50 right off the bat. So 12 minutes from now, right, the news is going to drop. We're going to give away. So for anyone who doesn't know what news we have today, it's the federal funds rate, right? So they're expecting to hold the funds rate. Inflation earlier this morning dropped, and that's why we saw the spike in gold, which hit our overall TP that we were trying to reach. As you guys can see, I had that marked up perfectly, reached it perfectly. But I got out yesterday because often days FOMC and CPI day is the most volatile, the most risky day. So to me, it was like, yo, we have to be smart. I was up 100% on this new account flip I'm doing, and I was like, yo, let's just fucking play it safe. Why even risk it? You know? But hey, shout out to all 190 people here. I really appreciate all you guys. Someone said the results of the giveaway will be posted on Telegram channel. No, the results of the giveaway are always just messaged the person who won. If you guys want, I can send them in the free chat, but it really doesn't do much. 200 people on live, baby. This is awesome. Everyone, we have a very, very big day. And one thing I want to say is I know a lot of you guys are new to the channel. I do these for free. The more subs we get, the more active we are, the more I feel like doing it, the more content I feel like putting out. So please, everyone, make sure you smash the like button, smash the subscribe button. You guys give to me. Trust me, I'm going to have something amazing for everyone on this live stream at the end. Like, fucking crazy. So right now, let's just scan the markets. I mean, bro, I feel like GA is in a beautiful place. Like, holy shit, I really like GA. Bro, I really like GA. But I have like a buffer for myself. So guys, keep in mind, we're doing on live stream, we're doing a $2,000 account flip, right? We started out, the account, to be exact, was at 1945. Today, the account is at 4314, right? So we are on our ways to growing this account. Oh, shit. All right. We're on our ways to growing this account. You guys can see 4314 right there. And yeah, I want to see, bro. I want to turn this into $100,000. I'm doing this live in front of everyone, obviously. But man, GA, look at her. See, now the thing is, I don't want to get caught going hard before FOMC and the news having something to do against me. If we look at the weekly isn't a bearish play, but the daily is beautiful. 8 hours beautiful. So guys, let's do it like this. Let's look at it like this. We're up over what? 43.14 minus 19.45. So the account's up 23.69 right now. That's our exact floating balance. So what I want to make sure is that when it comes to this account today, we don't lose over $750. That'll allow me to take 3 trades at $250 a piece. And you know, if I catch a better trade, my account, like if one trade could finally take my balance to 5K. And so for those who don't know, we are giving away $50 just to start the stream. It's so easy. All you have to do is go on my Instagram, click this recent reel, this winning strategy explained one, like it, comment, and story share it. That's literally all it takes. And then we'll be giving away $50 to someone right off the bat. And at the end of the stream, let's do this. Anyone who participates in this, I have a prize for you. But one person will win $50 right off the bat. I have something very, very fucking special for you guys. How much money did I risk the CPI? This CPI, I risked $0. I did not trade the CPI. I'm not going to lie to you. I was asleep. I didn't want to trade CPI right before FOMC. It just felt like it wasn't the move. Yeah, I just got back from the gym. It's pretty nice. Everyone, make sure we smash the like button and we smash the subscribe button. $218 people today. This is fucking awesome. GA, guys, I'm telling you, I'm really liking this one for some reason. I just like where it's priced on the daily, like a lot. God damn, look at GU. Let's look at GBP CAD. Looks very similar. GJ. And I don't know. I'm kind of enticed to just get in this. Let's see. If I were to take this, right? What's my stop loss? Thing is, I would want to target this for like a 1 to 2, which I think, guys, I might hop in this if it's 25 pips. Thinking about it. I like where it's priced on the daily, guys. You look at the hour. Clean rejection out of the order block. Let's look at the minute 15. Minute 5. I don't know. I'm being patient. I'm being very fucking patient. I think we would have needed one more confirmation for this. Like a break of structure within here. But on the minute 5, we don't have that. And that's what's sussing me out. Yeah, no, of course. I'm reading the comments, everyone. My bad. Can you share with us your new trading style? Please, bro. I'm tired of scammers. Yeah, bro. I mean, that's what the live streams are for. Like, I can't scam you guys on live stream. I'm doing everything here for free. Like, what? I'm just here because I believe this industry is going in the wrong direction, right? People are starting to just fake their lifestyle and do all this ugly bullshit, bro. Like, hop on a live, trade live, give them one take profit, show them real stuff. Like, this is real trade. I'm literally on this account. Traded this account live in front of you guys. You guys see, like, right now, I'm anxious. I'm thinking, I'm like, fuck, should I take the trade? Should I not take the trade? Like, this is how it really is. I'm not a fucking robot. Like, I'm at the end of the day, yeah, you got to trade like a robot, all that bullshit. But I'm human. I'm thinking, like, fuck, okay, this could be a good move. I could make money. I'm starting to think in my head, hey, you know what? This is 60 pips. It's GA, which means if I were to take 60 pips on GA, right, I would probably cash out around $1,000 if I took 3 lots, and the 25 that I would probably lose would only be, wait a second, no, 25 times 3 times 0.6. See, I would lose about 450 or $500 if I were to enter this. So, you know, these things, this is the stuff that's going through my brain right now as I'm looking to enter this trade, you know. What happened to the insane account flips? 10 plus RRs. Yeah, bro. I mean, we're starting one. Right now, we're up 100%. This account started at $2,000. And I want to see how far we can run this account to. You know, account flips, guys, you have to understand, you can't do this every day. Christian betting quality trades. I'm your biggest fan. Gotta pin that one. But yeah, account flips, you can't do every day. Like, it's impossible. So you have to wait for the right market conditions. Today, you know, we're patient. FOMC, 2 minutes, guys. 2 fucking minutes. Let's see how this goes. I'm not entered in this trade. I did want to get in, but we're not in. I just feel like I needed one more confirmation to really solidify this, and we don't have it. And so even if you look at the minute 5, it's like, where is this starting to reject from? The lows of this, which if you do trade support and resistance, you know, break, retest, retest. So like this could be continuing down. That's why I'm not getting in this one right now. But if we find a good entry off of the news release, of course, I'll be looking to hop into something. And then, of course, we're going to be on for the duration of the speech, the FOMC press conference, which will be 30 minutes from now. How many days will I be with you guys? I'm trying to do every day, honestly. I'm trying to do at least 3 days a week, like at least. Yo, guys, as well, I'll do another $50 giveaway for anyone who posts. Or I'll do a Signal Room giveaway. If you guys want a week free to the Signal Room, all you have to do, anyone can do this. This isn't a giveaway. It's just anyone who does this gets a free week to the Signal Room. All you have to do is share that you're on the live stream like this. You know, you can see this guy right here. He shared on his story. It's a photo of the live stream, or it's like a boomerang. Anyone who does that, I'll give a free week of the Signal Room too. All right. 20 seconds, guys. 20 seconds. 15. Let's see how this goes. This is every trader's worst nightmare. This is exactly why I'm not in a trade right now. Because even not in a trade, I'm feeling anxious. 4, 3, 2, 1. What would have happened? Oh, it's up. So what was the release? 5.5. They held rates as expected, you know? Let's see what the spread's looking like right now. 4 pip spread. Probably crazy slippage. I feel like, yeah, this will hit TP. When can we expect my first fight, and who'll be my opponent? I don't know, bro. There's a guy, Chris Concepts, who I've been wanting to take in a fight, but he's got some size, so I gotta prepare probably for 6 more months before I get to his level, and then I'll think about calling him out. I mean, guys, we called this out to the T. I mean, I think this is gonna keep pushing. I won't lie, but. Bro, if it was like a 1-to-1, I honestly wouldn't mind. I wouldn't mind getting in now for like a 1-to-1, risking like $200, $250. How many? Let's put like a 1 lot on this hoe, bro. Let's just see what we could do with it. You know, it's after the news is released, so I feel comfortable. I still think we're in the daily, you know, like we got that daily bias on us. All right, up $6 already. I mean, I feel comfortable. I know my risk isn't too much because, like, I really don't care what happens right now. I'm already up on the week, so if I lose this one, 1.91500 is going to be my stop loss. If I lose this one, I lose this one. You know? Beautiful push so far. Up $50. Why am I risking? This was a trade idea I had already really liked. I think we're going to reach this over here. I think that this will be an easy one-to-one trade. I think this is a very, very high probability trade. So that's why I risked on it, you know. And look, we're up $84 already. It's very nice. Let's see where we could take this to. How much time did it take me to become profitable? It took me about a year and a half. $100 in profit already. Not bad, you know? Right off the start of the stream, guys, we are up in this trade. I predicted this one over here. We didn't enter. I made that very clear to everyone. And now we're in this position here. As you guys can see, that $2,000 account flip currently up to $43.60. We're up $50 on this trade. And we're going to see how far we can take this. Make sure you guys click right there to never miss a live stream. Let's see what happens now. Let's look at GU. Wow. Let's look at GU on the daily. I mean, look at that area it's in, bro. Look at that. Did it hold that? Wow. Let's look at the weekly. Interesting. Still up 20, $30 on this. Nothing crazy, honestly. How do you trade news? I look at the expected versus the actual, and I also look at where the charts are priced in. How much am I investing? Guys, so in this trade, I'm risking about, let's see. So it's a 39 pip stop loss, right? So you would do 39 x 0.6 because it's GA. So it would be about $235. I said today I would want to risk around $250. So when you factor in the commissions to open the trade, that's going to be a $250 risk. Or either lose $250 or make $250. Huh, why'd my camera turn off? Let me check out my camera. Give me one sec, guys. All right. Camera should be back. Yo, drop a 1 if you guys took this with me. I want to see who's in this trade. Yeah, GU making its way back up. How long has it been since I first started trading? It's been about 3.5 years now. Am I trading on multiple sites right now? Like, what do you mean by that? Everyone, make sure to smash the like button on the stream. Let's run this up. And as well, guys, remember, so we have 2 giveaways. One of them, one of them is going to be if you just like, comment, and story share my last reel. That one is going to be a giveaway. One person will win $50 for that. And the other one is simply, guys, if you just share on your story and tag me that you're on the live stream, like do a little boomerang or something or a photo that you're on the live stream and you tag Ollie Trades, I will give everyone who does that, everyone, a free week of signals. I'm honestly thinking about shortening my stop loss to here. So I'm going to be a little patient. I want to see price pull up a little more, and then I might shorten my stop loss to right there. Let's see. If I were to shorten my stop loss and hop in again, how would that look? See, that RR right there isn't worth it. It would have to be an entry from here. Maybe if we get a candle closure above this in here, then I don't mind doing that. And then that way my first position is already like almost risk-free, and I'd be entering a second one at a pretty low risk. The one thing is I don't want to go too heavy before the press conference because the moves are going to happen in the press conference, right? I'm being patient. We're obviously, this one we are in right here. And obviously, guys, I explained why I didn't get in this one. I felt like there was, you know, the entry from down here. I felt like I needed another confirmation, and it was right before the news. So it was just, the risk didn't add up to me, you know? Like, the news could have easily, you know, I could have entered here. My stop loss could have been here, but the news could have gapped the market down to here, and my account could have been blown. What's that? Burned is in USD MXN. Yeah, Burned is a fucking beast, bro. He's in a short, off of this. Yeah, I mean, look at that supply zone right there. I don't blame him. I'm gonna guess he's got something like that rocking. I think GU is gonna short, bro. But once again, I don't want to get it. Like, I called it when it was like here or some shit. I don't want to get in when I don't want to get in during the press con. Like, bro, he could say something during the press conference that just shoots us fucking sideways. I think GA, yeah, GA is now in some drawdown. Let's see what we're looking like. $12. See, I feel calm. Like, I'm down $10, and even if I were to lose this trade, like, I'm still up on the week because I'm risking properly. So it doesn't really, like, it's not affecting me. Like, I'm not even worried. I'm not even worried about that part, you know? I'm thinking about adding like another position, but I just don't want to get too greedy, you know? And like, the reason why I'm saying all these things is because this is real trading. Like, this is how my brain actually works. Like, from a profitable trader, this is how my mindset is working. I'm not like, oh shit, I need to get in now. You know, like, I'm really thinking, I'm trying to be strategic. I'm trying to plan things out. Yo, guys, let's run this stream up to 100 likes. We're at 68 right now. So let's run that shit up. See, we're not in GU. We are in GA. 171 people on the stream. I appreciate all you guys. Yo, Dr. Dollar, what's good, bro? How's everything going? We are in this trade right now, bro. I'm thinking about taking another entry. Think about taking something like this, bro. Potential, you know. But potentially I'll take it. But I don't know. I just trying to be calm, bro. I'm trying to be patient. You caught UJ? Let me see. Oh, you rolled that up or what, bro? Yeah, I don't think I would have ever caught that one. Oh, bro, you probably ate on this move, huh? Dollar, why don't you join the stream, bro? I can send you a link. See, that's why I'm being patient on this scaling. Getting a haircut, this guy. It's just ranging now. I think it's just waiting on the press conference, bro. Read my comment. Show EMAs. Oh, the EMAs? Yeah, honestly, I don't use them really, but this is them. It's SMA 1, SMA 2, blue and red. Inputs 8 and 50. Free Palestine. Yeah, no, of course, bro. See, this is why we are patient. CGU. Trade before the conference or after. At this point, I'm waiting for after. Like, or during, you know, like. I want to listen to everything Jerome says. You know, I'm already gonna start sending everyone who is sharing the post on their story. I'm gonna give you guys the free week of signals right now. I'm gonna start that now. Let's do this. Products. View my products. I'm gonna create it right now. So anyone who shares it, you're just going to instantly, I'm literally just going to DM you a link to get a free week. This is just ranging now. Let's get back to the YouTube chat. Yeah, so I've been, bro, looking smooth in the glass. Appreciate you, bro. Yeah, these are blue light glasses, bro. My eyes had really been hurting recently from just all the blue light. So I invested in these, and bro, fire, bro. They were literally like $10 on Amazon or some shit. Ooh, my bad. Yep, I just sent out everyone the free signal room. Or the code for the free signals. Let's look at GU. Yeah, see, bro, I mean, I'm glad with how we're being. I think we're being extremely patient. I think this is... why did my camera turn off again, bro? What's going on? I think my camera might just be, like, overheating, low-key. I'm going to leave it off for a bit, and I'm just going to use my normal computer camera for now. Let's see. Streamlabs. Yeah, I'm just going to let the camera cool down for a bit. It's been on. I literally had it on for like 2 days. That's on me. Let's get back to the YouTube chat. Guys, I'm gonna go make a quick snack right before FOMC, and then I'll still be here. But let's put this text on the screen. Right back. Yo, what's good, stream? I'm back. We lost like fucking 20 people in that break. There we go. I am here. Let's switch my webcam to the other one now. Oh, it looks way better. It's actually insane. We're down $25. So one thing we do need to see is FOMC. All right, because we got to watch this together. We'll have the charts right here. Jesus, GA. How's GU looking? GU's going back up. They're moving inverse right now, huh? $150 people on the live. What's good, everyone? What's good? We're in this trade on a very light risk, as you guys can see. As you guys know, I'm doing my account flip live in front of everyone. 2K to, honestly, my goal is 100K. So we'll see how that goes. But right now, I made myself a nice little snack. Some protein yogurt. Fruits and granola. There's 25,000 people on the FOMC stream right now. Full transparency, guys, though. They're down $84 right now. Literally could give less of a fuck. Here we go. Jerome Powell's coming up. It's now 2:30. Grandpa is stepping up.
Achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance with continued strong job gains and a low unemployment rate. Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter.
I don't know if you guys can hear Jerome, but I'm playing him right now.
Purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023. Growth of consumer spending has slowed from last year's robust pace, but remains solid. And investment in equipment and intangibles has picked up from its anemic pace last year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year.
Oof.
In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year.
Think about taking a one lot on GU.
Over the next 2 years.
Just want to be patient,
In the
bro.
labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor
just a
market
light
have
cell right
returned to
here.
about where they stood on the eve of the pandemic. Relatively tight.
Little like
not
1 to
overheated.
1.25.
FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations
Trying to full point?
appear to
Fuck
be
no.
well anchored, as reflected in a broad range of surveys of households and businesses and
Yeah.
forecasters, as well as
Did I not send you the link, AJ?
the median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting
Happy
to
with these
maintain
trades
the
so
target
far.
range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our security
Down $50. My goal is to make sure that we don't lose over 750 today. The reason is, on the first day, I took this account from 1945 to 4315, or what was it? 4315, right? So if you do 4315 minus 1945, that means that we're up 2370. 2370. If I'm risking a third of my profits, and that's 790. After commissions, if I risk 750 on the day, it'll be just that. So I think GU is going to sell. If you guys look at the daily, I think we're in a beautiful supply zone. Look at the weekly. We're respecting that beautifully. Look at the 4 hour, like how it reacted to CPI. So I think we have a good trade on hand. The great stop loss, and we're just keeping our risk tight. Like, there's nothing crazy about this trade. Now we're up $65. And yeah, this is like as transparent as it can be, guys. AJ, let me send you that link right now. My bad, brother. You were the first one to do it, and I don't know how I fucking forgot. I sent it to everyone else. Let me get you your link right now. And as well, if you guys don't know what I'm talking about, guys, if you're private, I can't see your story. So send me a screenshot and DM like that you posted it and tagged me. So what I'm saying is, if you post a photo that you're on the live stream, I go ahead and I send you a free week of signals. AJ, let me get that to you right now. My bad, brother.
Projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current.
So this is how it works. It shows me everyone who shares my story. I go through it like that, and then I just swipe up and send them the link.
Or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting, based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring this stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right. This is where shit's going to go ape shit. When they ask him questions.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Just wondering if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several.
So guys, we're also going to do, here, I'll do a month. I'll do a month of free signals, not a week. A month giveaway. This one's a giveaway though, so like you would have to win. To those who share this reel on their story, they like, they comment, and they share this reel on their story. My latest one. Out of there, I'll give someone a free month. And anyone who shares that they're on the live stream and tags me on their story, I give them a free week. But that one's the free week. It's everyone wins. The giveaway, the free month, it's one person will win that one.
It's just a slight element of conservatism that we're assuming a certain level of incoming monthly PCE and core PCE numbers. We're assuming a good but not great numbers, and if you put that on top of where we are now, you get a very slight increase in the 12-month reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think. Let me say that we welcome today's reading and hope for more like that.
But if it comes in, just to follow up, it comes in the way you forecast it, it would seem strange for you to be cutting rates at all in context of a rising core PCE. Thank you.
Yeah, no, I mean, I think what we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2% on a sustainable basis. And that's the test we've
Guys,
applied. I don't know that
I'm going to take a little break from sending links because I want to focus on the charts right now. But right after, we send everything.
A fairly conservative forecast month by month that would lead to slightly higher 12 months rates by the end of the year. If we get better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Holy shit.
Nick Tamaros of the Wall Street Journal. Chair Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances of the differences there. Would 2 or 3 more inflation readings, like the one that we saw this morning, make a September interest rate cut possible?
So as far as the S&P part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the dot plot, their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're thinking, I can't really distinguish between two of these. They're so close for me. These are very close calls. But we ask them to write down the most likely one.
Just want to make sure my take profits are entered.
As you've said, there's 15 of the 19 are kind of clustered around 1 or 2. So I think I would look at all of them as plausible. But I look at I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it that is on the committee a really strong commitment to a particular rate path. It's actually just their forecast and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing. It's just what they think at a given moment in time, subject to data. In terms of future meetings, we haven't, we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier, we want to gain further confidence. Certainly, more good inflation readings will help with that. I'm not going to be specific about how many because, really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening.
Everyone, make sure to like this stream up. It takes you 2 seconds to like the stream up, guys. We're at 100 likes. I appreciate every single one of you guys. It takes you 2 seconds to like the stream. Oh, shit. Now I'm hearing my own echo.
That would call for a response, which is another thing that could happen. But again, we don't see that, and we see today's report as
nice. 60, 50 bucks down, 40 bucks down, easy. If these trades hit, we should be up on the day like about 1,000. If they lose, we'll have lost 750, which I'm honestly very fine with. Like I really am, because we're up 2,400. So that's like when I'm going more aggressive. Right now, we are in GU sells. At least I am. And guys, of course, I have to state this. But you guys already know this. It also says it in the description. None of this is financial advice. This is for educational and entertainment purposes only.
During the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that. And some people do, some people don't. Most people don't. But I'm not going to get into the specifics, but you have the ability to do that. So that what's in the SEP actually does reflect the data that we got today, to the extent you can, reflect it in one day. I think we'll see PPI tomorrow. We'll know more about the PCE reading as the month goes on. But the initial CPI reading and its, kind of first level translation to PCE, we did have this morning. We were briefed about it, and people were able to consider whether they should make changes. And as I said, some people generally do, but most people don't.
Let's go. Both trades are in profit again. We're up 90 bucks right now.
Hi, Chair Powell, Janelle Martin from Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation all the way down to 2%?
I feel good.
Or is there any sense that maybe the labor market is more vulnerable now to higher rates now that many of those imbalances have eased?
Be grateful for the signals. Oh, guys, I'm giving away a free week. All you have to do is literally just post like a photo of the live stream and tag me on your story.
Was kind of overheated 2 years ago, and we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit.
And then we're also giving away $50 and a month of signals to anyone who shares my, who likes, comments, and shares my recent reel on their story.
Prime age labor force. In terms of on the demand side, we've seen quits moving down. We've seen job openings moving down. We've seen wage increases moving from
somebody's at is must be Fondo, something like that. I can't I can't send it to you. You have DMs turned off.
Very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit. It's softened a bit, and that's an important statistic. But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still, they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market?
So sometimes you can't reconcile the differences. You just have to look at it and try to understand. And that's why it always makes sense to look at a series, in 3, 6, and 12 months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey. So, we're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless, the overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still.
I want to put in my
greater
GA
than
take
the
profit.
number of unemployed people. The jobs workers gap is still a significantly positive number, greater than
I don't think I put
before
it
the
in.
pandemic. So overall, we're looking at what is still a very strong labor market, but not the superheated labor market of 2 years ago or even 1 year ago.
Thanks, Chair Powell. Neil Irwin with Axios. Back on the
Guys, make sure we all subscribe to the channel. We're so close to 13,000 subs, guys. I want to reach there by the end of this week. Let's make sure we get there, guys. Every single subscribe helps a lot. So let's make sure we get there, guys. Let's run it up.
Over the last 3 months to see a much shallower path of rate cuts this year.
Yeah, the big thing that changed was the inflation forecast.
We're at 12,830 now.
Forecast moved up several tenths for the end of the
Fire.
year. And as I mentioned earlier,
Look at this.
in the,
12,831. Someone else just subbed. Good stuff, guys. Let's run this shit up.
what did we take away from this? We had really, really good inflation data in the second half of last year, then kind of a pause in progress in the first quarter. And what we took away from that was
Look at GU. Let's go. We're up 120 bucks.
we need to begin to loosen policy. So the sense of that is that rate cuts that might have taken place this year take place next year. There are fewer rate cuts in the median this year, but there's one more next year.
How do I use these indicators? Honestly, I don't, bro. I just kind of have them on.
25 and 26, you're almost exactly.
I like
where you
I like to look at them on the daily.
later
Like
because of that
if
process.
we're rejecting off of
You
one,
get data-
I think
you get
that's like
data,
a good
so
point.
we'll have to
But like
see
the
what
lower
the
time frame ones, bro, they get ran through like left and right.
where the economy has repeatedly surprised forecasters in both directions, and today was certainly a better inflation report than almost anybody expected. And we'll just have to see what the incoming data flow brings and how that affects the outlook and the balance of risks.
Gina Smiler, New York Times. Thanks for taking our questions. In the summary of economic projections, the long-run interest rate for
We're up 140 bucks, guys.
I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. How should we interpret what that means about how the committee views its current policy setting?
So two things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run neutral rate of interest is a long-run concept. It really is a theoretical concept, can't be directly observed, and what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability, potentially years in the future where there are no shocks. So it's a little bit, it's not something we observe today. Today we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So it's I don't think
136 people on the stream. Shout out to all you guys. Shout out to all you guys.
What we do, but honestly, it doesn't really get you where you need to be.
Everyone's been liking the stream too, bro. This is probably one of my best like chats in a while. Did you send the links to everyone who shared your recent reel? No. So the recent reel is going to be a giveaway. The ones for the links are if you post on your story that you're on the live stream. Any tips on account flipping? Follow my fucking lead, bro. Like, don't get overconfident. Have a risk plan. Like, today I went into the market knowing, yo, maximum I'm going to lose is 750. All right, that's step one, is how much do I want to lose? Not how much do I want to make. I want to lose 750. If I lose today, it's only 750. All right, then I start making my way backwards. I identify a trade. Based on that trade, I'm like, all right, how much am I going to put into this? Am I going to give myself one chance in the market, 2 chances, or 3 chances? Today I decided on 2 chances. So in this trade, I'm willing to risk around 400. And in this trade, it's about 350. Both of them are in profit right now. See, I'm up almost 200 bucks right now. Pretty solid movements we're getting
I
today.
also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one we know over time. But I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having the effects that we would hope for.
Well, thanks, Chair Powell. Howard Stein with Reuters. Just to carry that a little further, should we read this as a conclusion that the combination of tipping to one cut this year and acknowledging further progress on inflation as kind of a mark to market on the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet?
I'd be reluctant to try to draw that conclusion. I think this is about looking at the incoming data and asking how much progress are we making on inflation and how is the rest of the economy doing? Is the labor market still strong? That's what we're thinking.
Nice, guys. We're up $200. We're up 5% on this account.
You can
Beautiful movements.
translate
Beautiful
it
movements so
into
far.
the language you're talking about, but to me the focus
Look at
is more
GU,
on
bro. Look at her
a
go.
goal, which is price stability, another goal, which is maximum employment. How are we doing there? We think we've got a good, strong labor market still. We think we've been making progress toward the price stability goal. And then for a while there was a pause, and we look at today's thing and we think, well, that's a good reading.
Yo, bro, I decided to learn your strategy. I'm going to watch all the free content. I want to know any tips. Journal every single thing you fucking can, bro.
We're prepared to adjust it.
Literally document everything. Have journals, bro. Those things turn into gems later on. Anything you think of in the market, whether it's like in addition to your strategy or whatever, write it down, bro.
So just to follow up on that, I think one curious thing here is you've got now this restrictive policy in place and virtually no change in any of the major things for all of this year. You've got growth that stays above long-run potential throughout the forecast period, unemployment that never goes above the long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of some of what we've been getting is just the reversal of the unwinding of the pandemic-related distortions to both supply and demand, and that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also
Yeah, guys. So I've been sending out the links to anyone who is public.
supply conditions.
As if you're not public, I can't send you the link because I don't see that you shared it.
Trend, potential growth, and high growth, and yet you've had the benefit of inflation coming down, really fast actually last year, and we'll see what the rest of this year brings. So these dynamics can continue as long as they continue. Ultimately, the question is are you down to demand? And we don't know that though. We're look at today's report. If we see more like that, we can't know what the future holds. But in the meantime, we've made pretty good progress on inflation with our current stance.
Michael McKee from Bloomberg Radio and Television. The base case of the committee seems to be that there is going to be at least one rate cut this year, but your growth forecast doesn't see any slowdown in the rest of the year, nor does the unemployment forecast see any significant weakening of the labor market. And your inflation forecasts basically
Might need to get
average
out, break
to
even.
no change. So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
Depends on what he says.
We think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but no one has that as their base case. So no one on the committee does. But so that's how we think about it, and that's what we've been getting. That's what we've been getting is good progress on inflation with growth.
What he's saying right now is probably
good
bullish
level
on
and,
this.
with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that. But so far, they haven't had to. And, that's why we're watching so carefully for signs of weakness. We don't really see that. We kind of see what we wanted to see, which was gradual cooling in demand, gradual rebalancing in the labor market while we're continuing to make progress on inflation. So we're getting good results here.
Well, to follow up, is there any kind of concern for the housing industry or financial stability, banks, in leaving rates where they are for too long at this point?
On housing, the housing situation is a complicated one, and you can see that's a place where rates are really having a significant effect. Ultimately, the best thing we can do for the housing market is to bring inflation.
Let's go. Continue to melt.
Bring rates down so that the housing market can continue to normalize.
Noah, what's your app? You said I didn't send the link to you. Send me your app.
There was before the pandemic. There will still be one, but the distortions that we see now with lock-ins and things like that,
Like a million fucking DMs
in
right
terms
now.
of banks, the banking system has been, solid, strong, well capitalized, lending. We've seen good performance by the banks. We had the turmoil early last
Another question: how do you journal?
Banks have been
Put the
focusing
pair,
on,
your lot size, your confluences, why you entered, what time you entered, why you exited, and the outcome of the trade. Write down your reasoning for the trade. Bro, just literally look up trade journal online.
Thanks. Chris Rugaber at Associated Press. I was wondering if we can read on inflation, if you can tell us a little more about where you see inflationary pressure in the economy. You mentioned labor markets coming into better balance, and inflation expectations appear to be well anchored. You're seeing, anecdotal stories of the large chains like Walmart and Target are announcing price cuts. McDonald's announcing a $5 meal deal. So, people may still be unhappy about prices at the grocery store, but it doesn't seem like there's a lot of inflationary pressure left in this economy. I wonder if you could tell us more
So
about it.
I think it's true that inflationary pressures have come down, but we're still getting high inflation readings. So, and I think you can see it in various places. In some parts of non-housing services, you see elevated inflation still, and that's probably it could be to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in import prices on goods, which is kind of hard to understand.
Let's see. Hold on. Can I do a video of myself journaling anytime? I post the stream. Guys, you guys have to understand. There's been 70 people who have posted it. I've responded to every single one that shows there. If your page is private, I can't see it. So if your page is public and you haven't received a link, drop your @
Pressures have come down. As I mentioned, the labor market has come into better balance. Wages are still running,
No, see, you didn't post the stream. You posted the reel. That's a different giveaway.
sustainable path, which would be that
That's for Noah.
inflation and trend productivity. You're still seeing wage increases moving above that. We haven't thought of wages as being the principal, cause of inflation, but at the same time, getting back to 2% inflation is likely to require a return to a more
And
sustainable
Isa,
level,
I
which
just
is
sent you it.
somewhat below the current level of increases in the aggregate.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. There's obviously a lot of focus on how many cuts could be expected this year, but can you give us a sense of what one cut by the end of the year would actually do to the economy? What you think would be a meaningful difference if there was a cut by the end of the year, or even two?
I think if you look back in 5 or 10 years and try to pull out the significance to the U.S. economy of one 25 basis point rate cut, you'd have quite a job on your hands. So that's not how we look at it. Really the whole rate path matters, and I do continue to think that when we do start to loosen policy, that will show up in a significant loosening in financial market conditions, and the market will price in what it prices in. I have no way of saying, we're not at that stage, so I don't know what we'll be thinking about at that time, but it's a consequential decision for the economy, and you want to get it right. And fortunately, we have a strong economy, and we have the ability to approach this question carefully.
And then as well as guys, just in case you are newer to the stream, we are doing a giveaway where all you have to do is share my recent reel. This one right here. You have to like, comment, share the recent reel on your story, and I'll be giving away $50.
Do you still characterize it as expected bumpiness or something more lasting that is affecting your policy for the rest of the year?
You know, we you always want to avoid the tendency to dismiss the parts of inflation that we don't like and just make it go away. So, but we had a quarter where inflation was running higher, and yes, I could stand here and say it's stuff we shouldn't have taken signal from, but it is what it is. You know, you have to, you know, low inflation is low inflation, high inflation. So if you have a quarter where it's higher, we tried not to take signal from the first couple of months, but we got a third month.
Guys, I have about 25 minutes and then I have to go. It's also, we have one more hour, I think, well, we have 2 more hours in the market. So I'm really not looking to take any more entries. I think that these are very solid entries. I don't think I'm going to be entering anything else. Depends, you know, but this is where my brain is at right now. I'm already maxed out on my risk for the day. I don't want to necessarily change that. What I want to say, guys, is please make sure to like the stream and to subscribe and hit that little bell so you guys are always notified when I go live.
It's only one reading. You don't want to be too motivated by any single data point.
Hi, Chair Powell. Thank you for taking our question.
Guys, you know, if you guys enjoyed the stream, you guys want more guidance, I do guide my Signal Room day to day, and I also have like one-on-one mentorships and stuff. So, I mean, I give everything you guys need for free. You guys can learn exactly how to trade from my free course. You guys can learn from the live streams. You guys can make money. But, you know, the difference is some people need guidance. Like, they need extra guidance, and that's why I have, like, the Signal Room. I have the mentorship and things like that.
Feel about the economy. That's not our job. People experience what they experience. All I can tell you is what the data show, which is
Live from Moscow. Yo, everyone in the chat, let me know where you guys are from. Drop what city, country, whatever it is, state that you're from.
It's been a long time since we've had, a long stretch of time with unemployment at or below 4%. Very long time. We had a period of high inflation. Inflation has come down really significantly, and we're doing everything we can to bring that inflationary episode fully to a halt and fully restore price stability. We're confident that we'll get there. And in the meantime, it's going to be painful for people, but the ultimate pain would be a period of a long period of high inflation. It is people who, lower income people at the margins of the economy who have the worst experience, who experience the most pain from inflation. So, it's for those people, for all Americans, but particularly for those people that we're doing everything we can to bring inflation back down under control.
As just a quick follow-up here, you've indicated one interest rate cut sometime this year, and I know you don't have a crystal ball up there.
When is the next meetup? If you're in Miami, I'm going to be doing one 2 weeks from now.
Very expensive. For everybody who's out there waiting on a rate cut,
like, it'll be, I'm going to post about it very soon, actually, bro. I'm going to post about it. I'm probably going to do it the 28th. June 28th will be a meetup. I just want to make sure the weather and everything is chilling. Like, at that time, that's all I'm, like, really waiting on.
So, having that kind of confidence that inflation will be at 2%, it just pays benefits to the whole economy, to all Americans for a long period of time. We had that period for a very long time. We very much want to get back to a place where people can not think about inflation. It's just not a concern in the everyday economic decisions that they make. We were there for a long time, and our goal.
We up $150, guys. Fire.
Progress, and we're in the phase now of just sticking with it until we get it done.
Claire Jones, Financial Times. Just drawing on the change in the statement on there being modest further progress on inflation. Halfway, through the year and after today's CPI release, what have you and other committee members found that has been particularly encouraging to you? And just in terms of the conservatism, how much of that is about stickiness in shelter inflation in particular? Thank you.
So encouraging has been that growth, the growth clearly that we had last year, and particularly the second half of last year, and we continue to see still strong growth, solid growth this year. That's been very encouraging. If you go back a year, there was a real concern about, very much.
Damn, goddamn, how long is this guy gonna speak?
Many forecasters had that.
Let me go to the gym. I'm gonna go boxing after this. Bro, I've been like throwing out my fucking shoulder.
So that's been encouraging. I would say that today's inflation report is encouraging, but it comes after, several reports that were not so encouraging. You ask about.
Let's go.
Your second question was really
Up $240.
So, I think if you go back a couple of years, we know that there were
What about
renters
Toronto? Bro, I'm going to do a world tour soon. Just stay
people who
tuned.
own their houses, and we have
I literally mean like the whole world, bro. It's going to be sick.
and so when market
Still haven't got my
interest
link. Must be
go
following.
up
No, yeah, I told you. I mentioned you on the live, bro. I said it wasn't letting me
really
DM
go
you.
up sharply, those play into rollover rents much more slowly for existing tenants than they do for new tenants.
Oh, I guess you fixed it. There, I sent you the link, boss.
We found now that there are big lags. So there's sort of a bulge of high past increases in market rents that has to get worked off, and that may take several years. Nonetheless, as long as market rents are going up at relatively low levels, and they still are, this is just going to happen, and just is going to happen more slowly than we thought. We also do sort of this thing where we impute a rental value to owned homes, and that's many countries around the world do that. Some do it differently than us. It's something that the price experts.
I've sent the link to everyone who shared it publicly, like instantly. Like everyone who has shared it publicly has received a link by now.
At changing or would look at changing, anytime soon. But it's true. It's one of the very hardest things in inflation and in prices is how to think about, the services that someone is getting by living in a home that they could rent, but they're actually living in it. And some countries choose to just ignore that, but that's not how we do inflation here. We do it the way we do it, and we've been very transparent about it. And it's true that we're seeing delays in realizing what's happening economically, but we understand that. We understand that very well.
Edward Lawrence with Fox Business. Thank you for taking the question, Chair Powell. So I want to go back to jobs and the last jobs report showed that over the past year, 634,000 more people took multiple jobs.
All right, guys, I have to end the stream right here because I have to get ready and I have to go to the gym. But thank you guys so much for tuning in. Make sure you guys are in the free Telegram chat because I'm always announcing when I'm going to go live. We're going to be back to doing at least 3 live streams a week. Yes, fucking killed it. Everyone, smash the fucking like button and the subscribe button. Here, I publicly showed you guys me entering the trades on here, showing you guys updates, talking you through them. And so just to make this very clear for everyone, my take profit, my stop loss for GU, right? My entry is 28200. My take profit is 1.27650. My stop loss is 1.28650, right? Next up, we have GA. I'm in these buys. My entry is 1.1900. My stop loss is 1.91500, and my take profit is 1.92300. So I need everyone to spam W's in the chat, and yeah, make sure you guys, if you guys want more guidance or anything, check out my WAP store. I have the mentorship there. You guys can always DM me on Instagram if you have any questions. And yeah, like let's just all get better. I'm looking to just help as many people as I can. Let's get a W stream. Let's get a W stream in the chat.
So how close then are we to that point where the consumer can't continue to spend as a spending, or companies can't hire like they're hiring?
Consumer spending is still growing. It's not growing at the pace it was growing at a year or so ago, but it's still growing solidly. And by the way, other parts of the economy are picking up. Spending on equipment and intangibles has picked up quite a bit in the wake of all the construction that we saw of new tech plants. So overall, the economy is exhibiting solid growth, and something around 2%, which is a good pace of growth for the U.S. economy. But you're right though. We do see the same thing other people see, which is increasing financial pressures on more lower income people, and the best thing we can do is to foster very strong jobs, ultimately to get inflation under control, because those people experience inflation very directly, very painfully, and once we get inflation under control, rates can come down, which will also improve things.
Victoria.
Hi, Victoria Guido with Politico.
All right. Thank you.